Good morning. Good morning, everyone. And we just thought we'd punch up and let you watch. Looks like we could have a dark Monday here. Um, we got gold just rocketing higher 80, 50, 80, 100 points a day. Don't get in front of it. And aggressive traders, can fade it in spots, but otherwise, we're going to let it run. The VIX is elevated here at 725. ES 5 minute is going short again at 725. Nasdaq, um, tech. There's a number of things going on. Um, by the way, the trade that's in there that's fully robotic, that's gone in with the machine. We're going to let the machine run it. We're going to try to let the machine um, run much of at least the morning. Um, but when you have debt, everyone knows the US has a large debt, but every country has a large debt. No argument there, right? We all know countries, everyone, big debt. Equally, on the other side of the debt, there are creditors, credit. So if you have a debt bubble, you also have a credit bubble. When the debts stop expanding, when they try to bring them in, on the credit side of the equation, they become nervous. They want to get paid, and you run into a credit crisis. That's where we're headed. That's what gold is saying. And it's speaking in volumes elsewhere. The big hedge fund trade, short the yen. We've been saying this for months. Short the yen, go long NASDAQ. They've all done it all over the world. On a position basis, Don and Sue have been accumulating, we've stopped, but we're accumulating yen futures contracts underneath 65 cents. They're now at about 71, 72 and going higher. They're reversing that trade, short yen, long risk is the carry trade. It's now unwinding. They're de-risking. It's going to be a while. And now, the tariff thing, it may have been the pen that pricked it, but it always was going to pop. These things don't, this notion of a soft landing is sophomoric because they never do. They never land softly. So you're getting to see it real time. It's a hell of a thing. We'll let you watch. Our job, day in, day out, extract cash flow from the money flow. And for the moment, we'll collect these things called dollars. And yes, they're going down in value. I wouldn't get too bearish with them, though, down here. Mm, I wouldn't. That's the beautiful thing about Swing Machine and the tools that we have. Whatever the market is, it's not possible. It isn't possible for the markets to get past us. It's sometimes hard to believe your lying eyes, though. But it is what it is. Enjoy. Good morning. Good morning, everyone. It is Monday, Easter Monday, and at about 9 o'clock. And we got some odd things going on, right? But we got an elevated VIX, so fear is creeping in. We have the ES down 60 handles. We have the NASDAQ down 280 handles. We have the Dow down 350. We have the Russell down 18. And we have gold up 100 points. And of course, the dollar has been cratering um, and continues to crater. And what's really odd, right, is that we have interest rates rising, 10-year rates rising. I don't even think the Fed can stop it. So, so when you have interest rates rising, you also have bonds falling. So you got dollar down, stocks down, bonds down. What else is there? You know, they're going to gold. They're pouring into gold. We also have going on the reverse of the yen carry trade. Hedge funds around the world borrow yen short, and let's get into Nasdaq and let's get into risk. That's why we've been buying yen. Um, we're not buying it now; we're holding it. But Susie and I, on a position basis, got long yen contracts below 65 cents. They're now at about 70, 71 and growing. So it was a risk off, setup. Um, Interesting times. And, I just want to deposit with everyone that might be passing by. This is how I think about it. Um, I'm not saying that it's right or wrong, but in these very simple terms, because I'm a very simple minded person. Let me see if I can graphically do this. I'm going to try to do something here. Haven't done it. It's just been kind of on my mind a little bit as we watch this, right? So in let's say this is, I can't write in there, but I'm going to write here is 19. Oop, we can't write that big. Bear with me. So if you're thinking about this, like, what in the world's going on? It's very, it just makes so much sense. Um, so let me do this. I'm going to write right here. This is 1981. This is 1981. Where are interest rates on the 10-year treasury? Right. Well, we know, that's let me ask Bing here exactly. I don't have a chart in front of me, so I'll just ask Bing. Um, we know mortgage, that yields were up around 18%, but let me just ask. Bear with me a minute. I don't even want to go to a chart. I'm too lazy. What was the yield on 10-year treasuries? And why 10-year treasuries? They are the biggest, deepest markets in the world. Everything is priced off of them. Everything, not just here in the States, everything. In 1981. Okay. So the 10-year treasury, so I don't want to use mortgages thing, but the yield on 10-year treasuries in 1981 was 15.32%. That was the yield. Imagine that. So, and the United States, did we have debts? Yes, but as a percentage to GDP, it was relatively small. Since 1981, interest rates have basically gone down and down and down, right? And in fact, in '08, they were quite low. And then after the '08 debacle, they started doing quantitative easing, and they brought the 10-year yield, virtually down to like 1 or 2%, right? And there was even some speculation that they could even go negative because people were trying to get on the other side of the trade. When you push down interest rates, the bond market does what? The bonds go up. So let me see this. So as the rates go down, I don't want to do it that way. Bear with me. I figure out how this thing, we do this kind of proportionally. Nah, let me see how I can do this. I'm trying to get the circle to go. So I got to figure out how that works. Bear with me. I think I can do it this way, right? Nah, I can't. Where do I got to start this thing? Bear with me. This damn Zoom tool. We're gonna get rid of it. I can't move it. This is the damnedest thing. I would like to draw a big circle. All right, there it is. I got to start it there. So the pie gets bigger, the money supply, as they come down. And then it gets bigger. And then it gets even bigger and bigger and bigger. You're doing this as the interest rates go down. You're doing it for decades. And then with '08 and COVID, well, then oh man, we gotta really, and they just make this huge. What is that? That is a debt bubble. It's debt. It money, when the interest rates are really low, money doesn't have any value. And if it doesn't have any value, people change their behavior. And what do? They don't bother to save it. Why save something if it has no value? So this is just collectively. So they buy shit. They buy anything and everything. And they will spend anything. And they will finance it too. It's the proverbial, I'll buy a basketball, but I won't buy the basket or the bowling ball. I won't buy the bowling ball. I'll finance the bowling ball over 30 years for 50 cents a week or something. They just finance everything. It just grows and grows and grows. They don't save. They don't make any good value decisions. They buy digital art. They buy, Beanie Babies. They just buy shit. Well, when you have a debt bubble, there is somebody on the other side. And this is debt here on this side. Debt. Maybe we should do it in bigger letters. Oops, sorry. I'll do it this way. It's debt bubble. And then over on this side, it's a credit bubble. And I'll paint her green. These are the folks that have the money and they're just basically loaning it out. And so it's fine as long as the debt bubble keeps growing and growing and growing, and the credit bubble keeps growing and growing and growing, and then everybody is fat and happy. And actually, it really isn't. It's really kind of sick, but because then what happens within these credit bubbles that have been stretching this long, can happen, especially at the extremes, at the edges, you'll suddenly have companies, for instance, tapping into this, and these companies may not even be making money. They're Warren Buffett says, when they're swimming naked, you don't know they're swimming naked until, the tide goes out. So you have companies that aren't even making money, yet they're doing well. They may have employees that are just, shitty employees, but they don't even care either. And you may have people that are making, two, $300,000 a year, and they're just, nobody cares because everything's doing great. Well, what happens is when the debt bubble starts to contract, and we've seen now the 10-year treasury has gone from a COVID low of about 2%. It's now at about 4.3, right? The historical norm is 4.5. That's all it's done. It hasn't, it's not at 15. I'm not saying it's going to 15, but it's just that it's starting to contract a little bit. And now you have, someone like Trump saying, well, we're going to cut government spending, and he's reducing the spending. He's reducing the debt, or trying to reduce the debt. He wants to grow out of it and all of that. And then, of course, the tariffs, may have been, a little bit of a prick. So when this starts to contract, these people over here on this side say, hey, wait a minute, these guys aren't building the bubble anymore. We got to get paid. And all of a sudden they express an interest. That company over there, well, that company, we know it to be a bunch of shit. They're not making any money. They're not making any revenue. We got to get out of them. We got to get out of the NASDAQ. We got to get out. The value, they all of a sudden we're not going to get our money back. And then even at a company level, they'll be like, hey, that guy down the hall that we're paying, $200,000-$300,000 a year, when he's on Facebook, 20 hours a day, maybe we got to get rid of his ass too. Right. So everybody starts like they start, in my view, they start doing what they should have always been doing, making good decisions on valuation, and so this is just the start. This is just the start. But that's what's happening. So when this thing starts to contract, they start looking like, well, what have they been doing? So they've been borrowing. One of the things they've been doing is they've been borrowing the yen short in Japan because it's like, toilet paper, and they've been putting the money into the Nasdaq. Well, we know that that's unwinding because we see the yen going up. And as the yen goes up, anyone else who's done that over here, they're like, oh shit, we better get out of it. We got the NASDAQ going down and we got the yen going up. We're really going to get pinched here. We're going to get pinched, you know? Um, that ain't going to feel good. And so then they like, well, maybe we got to get out. And in the end, it isn't what companies make. It isn't it's just the prospect that there's going to be somebody else that, values your decision to get into a particular company more than the other one. So when they say, hey, we can't be in, um, we can't continue this, so we got to get out of the Nasdaq. So we better get out of the short yen trade. So we better buy yen. That exacerbates it. We better get out of the Nasdaq. We better get out of stocks. We maybe better get out of the United States. I mean, they've all done this. And then they're like, well, where else can we put our bread? Oh, let's put it into gold, because gold has 1,000-year history of holding value. So it makes really good sense. Now, now I'm not saying that this is what's going to happen because nobody really, really knows. Okay, but this is 1981, right? These rings could be decades, for God's sakes. I probably should have done them in decades. But, this is now 2025, right? Another period in US history, world history, where we had a huge credit bubble was from 1920 to 1929. We had the roaring 20s. We had so many automobile companies, it was incredible. And railroad companies, they were going to $1,000 a share. Well, we're not the first people to play this game, right? And they were having a grand old time in the 20s. By the way, too, when you have a credit bubble and a debt bubble, the culture goes to shit, right? Because nobody cares. Everybody's making money. Yeah, boys are girls, girls are boys. Who gives a shit? We're all making money. Let's, let little Johnny be June, and we'll go on a cruise. They just don't care. It's just, let the good times rock and roll. In 1929, though, now people will blame. There are these, economic historians that go back and blame, Senator Smoot and Senator Hawley, because what did they do? They introduced tariffs, protectionism. Now, depending upon where you went to school and who was teaching it, they would say that was the reason. That was the reason for the depression. That was the reason for the crash in 1929. Was the Smoot Hawley, tariff thing. With no mention of the fact that from 1920 to 1929, we had a credit bubble. But the credit bubble came to an end in 1929. And between 1929 and 1933, it took 3 years, 3 or 4 years, the Dow Jones went down 89%. Are we going to do that here? I don't know, kids. But there's some things that are run parallel, and there are others that don't. One of the things is the American dollar back in 1929 was backed by gold. Nixon took us off the gold standard, so the American dollar is not backed by gold. Now it is backed by aircraft carriers, and nuclear bombs. It is. Um, but in the credit bubble is much, much bigger today than it was from 1920 to 1929. I mean, we have really, really poured it on. And everyone's got it. Everyone's got a debt bubble. China's worse than ours. Europe's got theirs. They all got it. And then this personal debt too. So, but it appears with the moves that we're seeing, we're going to go back to the market. What are we seeing? We're seeing the 10-year yield on interest rates rising. They're rising today. We see them rising. And we see the markets. Oops, bear with me a minute. So to net it out, we have the dollar going down. We have gold. Gold's doubled in 2 years and going higher. Silver's probably going higher. The commodity is probably going higher. And they're getting out of risk assets. I mean, they're de-risking. And then what happens eventually, if it gets as it starts to come in, the people over here, they start to distrust not just these people, they start to distrust each other, the counterparty risk. So that it's that simple. And this notion that that Trump might have, that this can be cured by lowering short-term interest rates, nah, that isn't going to work either. You know, but you know what? They're going to stick it to him. He's pin the tail on the donkey. They're going to pin it to him. It was always going to end some way, and just as they're going to blame, and the media, he's going to take the blame for it. He may have been the pin. He may have, or it was going to go anyways. Think about what the Federal Reserve did too, by the way. In September, the markets were at highs. We're at highs where everything was fine, and they had an emergency interest rate cut. Yeah, they're probably going to have to cut, but it's still, but gold, that's only going to send gold higher, you know. But yet they won't now. So this is historic. You're living it, you're seeing it, and and there will be winners coming out of this. most certainly. Volatility will be in spades, and those that can trade are going to do just fine. It's a credit bubble, folks, and it's unwinding. We are running a little program. If any annual members passes by and they want to know what that program is and what the settings are, don't hesitate. You can just drop us an email. But we're going to let the program run. It isn't Swing Machine, but we like to keep Swing Machine up. And very very interesting times, right? Whenever markets come back, they're just resetting, they're just rebalancing. It's just a question of where they reset. you know so we're not going to get into, are we going down, we're down 20%, but we going down 40%, we going down 80% over two. It's possible. It isn't going to make any difference to us because we're traders, right? We're going to trade this way, we're going to trade that way. But as an investor, you know, you have to know your economic history, and you have to know, um, and make some macro decisions. Because if you're an investor and you're not trading at all, you're not trading, within a year or two, and you're just, buying and holding, um, if you catch an 80-90% decline over the next few years, and you're just, 5 or 10 years out from retirement, that could be a drag, and it can happen. The question is, do you want to run that risk? The issue for a lot of folks right now is we got portfolios that are, 10-20% off their highs, and they put them 60% into um, um, equities and 40% into bonds. Well, bonds are going down too because the rates are going up. If you're looking for, maybe some investment ideas, some stocks, I think some of the, I think silver SLV is interesting. I wouldn't do anything, huge. I don't think I'd be chasing gold up here. If you're in gold, great, and don't sell it, hold on to it. But I think silver would be the better value, and you could buy the SLV today. I think things like some of the energy stocks appear to be maybe bottoming out here. This would be like for 2, 3 years, anyways. But companies like Oxy, OXY, Devon, DEV, Schlumberger, SLB, they've been really, really trashed, and they appear to be kind of basing out a little bit. If you're looking for, longer term, like, years. I wouldn't do anything. I wouldn't make massive bets on much of anything yet. Um, Still, I think, there's going to be a lot of volatility and a lot is going to go on between here and there. We're traders, so we don't really care how high the markets go. We don't really care how low they go. The most important thing to us is liquidity, that there are markets and that they're fairly orderly, that the difference between the bid and the ask is relatively tight. We like them to be very liquid. We also like the leverage, proportional leverage. We also like the volatility. We like the up and down action that enables us to extract cash flow. That's why. So we're not really, we're not invested in seeing the S&P go to a certain number. That's a public thing, a public view, a retail thing. And if you're asking yourself what we asked, ourselves in the early 2000s, I said to Susie, if we're supposed to buy and hold, who the hell's doing all the selling every day? Well, that's a good question. Oh, the pros. Oh, okay. I see. And I'm supposed to sit on my ass and get my ass handed to me every year, not every year, but every correction, major correction. So, any case, um, be sure to visit Stock Market Caddy. Any questions, let us know. We'll let you watch. I'm not going to bend your ear. And happy to plug anything in that you might like. We can take a quick peek at the Renko chart. Let's go right here. This is the S&P. And this is a view, this is to mimic more of a daily. And you can see this, it's our tool is telling us you might favor the short side, distribution underway. And here are the C points down. We just couldn't hold up in here. This is that 54.94. And here we are now trying to break the support level. And this is the most recent low. This is below 5,000, 4,900. So are we going down there to test that out? I think we ultimately have to. Is that going to happen this week? I don't know. There'll be plenty of jogs. There'll be plenty of feints. So you got to, have some trading acumen and some trading tools. Okay. And the machine just took a profit while we were talking. All right. So the machine just took that profit. Thank you very much. And now she's still running. Um, I could, as a trader, as a program trader, could choose to turn it off and just call it a day. Oh, nope, she just went in again. By the way, she's trading 5 micros. 5 micros. Oh yeah, yeah, it's a beautiful thing. So we've reduced because the market is so volatile. We've reduced our leverage. It's the responsible thing to do, and so we'll see how she does. But I can choose to turn it off early in the week. I'm going to kind of let her run. It's traders like us that provide the liquidity in a market. If you did not have traders, you wouldn't have a market. All you would have is everybody buying and everybody selling all at once. You would have huge bubbles and you would have huge crashes if you had no traders. It's the traders that provide the liquidity and the semblance of order. However, when you compare the year 2000 to 2025, there's really no comparison. And this is what spooks Baggett on. The investing public has bought into the buy and hold. They all their money is passively invested. The bulk of the money in 2000, 70% of all the retirement monies was being actively managed by mutual funds. Active managers making active decisions. Today, it's the other way. 70% of the money, retirement money, is in passive ETFs. And I think that's a huge risk. And they haven't been tested. What will they do? Will they just open up their machines? They can do that, or just call up telebroker and sell. At least in the year 2000, they had to do that more of a mutual fund. There was a little bit more um, active management there. So they're going to get tested now. These exchange traded funds that the investing public is in, on the way up, they're beautiful things. They create shares too, by the way. They create shares on the way up. On the way down, they have to deconstruct those shares. They haven't really been tested in a big way. So is this the start? But look at here's gold up $100. This is the yield on the 10-year treasury, and it's at 4.375. It's holding steady. Dollars going down, rates are going up. A little bit odd. Actually, a little bit more than odd, but it kind of makes sense. And if the 10-year treasury gets to 4.5, 4.7, 5.0, put a fork in it. Put a fork in it. It's done. It'll be done. And I'm sorry to say, Trump will probably be done too, because this bubble is going to unwind. But we'll see. And that's why we get that 10-year yield here. Now we're not trading it, intraday like this, but it's, we kind of want to have sight on it. So, um, we're going to just do our thing. If anybody wants us to plug in any stock or any market, happy to do it, and we'll check in a little bit later. Now remember, there are 24. There are 24 possible trading days in a month. That's it. The rest of the time you got to take off. You got to take the weekends off. You got to, but you don't have to trade every single day, all day, every day, right? Um, we've shared with everybody we like to take Fridays off. I mean, we're still working, we're doing other things, but we try not to be trading. So now we're down to 20 days. That's it. So the idea is to get yourself settled in on a work schedule that works for you. Try to define it. Don't let the market define it. And I hate to break it down this way, but $100 a day net would be 2 grand a month. 200, 4,000, 500. You know, um, but you've got to, and this is what we're trying to expose everybody to, and trying to get everybody thinking about this, especially during the Q school. You have the market, the overall market, whatever that market is, the ES, the NQ, gold, whatever it is. It's going to do whatever it's going to do based on, the collective wisdom or, whatever, you know, foolishness of a particular market. I can't control that. It's going to do whatever it does. What we want to do as traders, we want to try to define what we're going to do. What market, starting with what market are we going to trade? How much leverage are we going to use? What days are we going to trade? What hours are we going to trade? How are we going to trade? How are we going to make our decisions? Are we going to let the machine make all the decisions? That's probably not, for short periods of time. It's okay, if the car, can go park itself in a parking lot, can take you to the corner store. That's okay. But I'm not sure that I'm going to get in a self-driving car in Boston and, fire it up, sit in the back seat, let it drive me to LA. I'm probably not going to do that. I don't think, that, these trading robots, they're tools, they're trading tools. They're meant to help you get from point A to point B in a comfortable manner, but they're not so that you can just, um, check out or not have driving skill or not have some piloting skill. You do need to have that. Makes sense. But there's a lot of things that you can control. The market not being one of them. That you can't. So you just have to let go of that. By the way, that little macro little conversation that had, that's got nothing to do with what we're doing day in and day out, right? So if you find that interesting, I find it interesting. I like to read about it. I like to see history, play out, but I don't make any um, trading decisions, based on that. We're tracking, the money flow. Now, some of this money is big, big money, for, because these billionaires, they can't do what we do. They've got to be, some of them have to be invested, have to be by charter, some of these hedge funds, and they have to make some, bigger decisions over larger time frames. So, like right now, we were, um, at the first of the year, I mean, we were particularly bearish. I mean, we were, and our systems were showing us that. But we were also bullish the Japanese yen. It's going to be it's a huge investment for us, a big, not huge, a big investment for us. It's doing great, and we were accumulating futures contracts of the Japanese yen under 65 cents. And we plan on, I hope to hold them. I hope I still got them at the end of the year. Now I'll have to roll them, from one contract to the next, but that's kind of a seamless event. So there's always There's going to be markets going up, markets going down. The gold, can you trade around gold? Absolutely, you can trade around it. But, gold over the last 2 years has doubled. And I mean, we can come in and look. Let's just change all of these symbols. I'm going to change this here. Bear with me. I'm going to change them all to a daily basis. A daily basis. Now, these are leveraged. Okay, so the VIX goes long 37 days ago. Now, forget about the money. You could have gone long the VIX, but forget about it for now. As a trader, let me kind of push this up here. Here we go. As a trader, that long VIX would have told you, I don't have the date here. Let me put the date back in. So what we do is we can do this. Here she comes. Here she comes. She hears me talking and then she's like, that's Abby. He's talking. I'm going to start squeaking the toy. Here she is. Put the entry date in here. All right. So we got the entry date and we'll widen this out. We'll put it back. I do it just to save space. So this was back on February 27th. That was a warning. That was a warning shot. We told everybody, do you hear her? Every day is Christmas with that girl. So a year and a half old golden. That would have been a warning that the markets were likely to turn down, but we can tell they had already turned down, Don. And they did. The ES turned down on 39 days ago, back on February 25th. Now, that wasn't Aunt Mary and Uncle Bob, getting out. Those are hedge funds. They got out at 6022.25. Now, this is up 13% between the entry price and where it is now. If you went short, you'd be up. If you got out, you could have saved yourself a 13% haircut. If you had gotten an option on, you could have killed it, right? If you had put on a mini contract, yeah, you're up 39,000. If you had put on a micro, you're up 3,900. If you had shorted 10 minis, you're up 390,000. These banks are trading thousands of these things. Hey, DT. Then we look at the daily on the NQ. It's repeated twice here because we had the 1 and the 5. We'll put it back. This is 38 days ago. One mini is up 66,000. The trend is solidly down. I don't need a chart to tell me that. I mean, sometimes people look at charts and they get vertigo. Can't tell up from down, down from up. They start seeing more than they should be actually looking at. It's very simple. It's down, and it can go a lot lower. Right? We're not even in panic yet. We were there briefly, and it'll come in and out, but we could go a lot lower still. Here's the Dow 40 days ago. There's 25 grand on a mini. Now the Russell was speaking volumes back on December 18th. The small caps, get the hell out. Now, if you're, your local, your favorite little boutique broker told you to get into small caps, you're down 18%. That's on the index. If you're holding the individual stocks, you might be down 30, 40, 50% and going lower. Could be. Sorry, I hope you don't have any. And then gold. Everybody's talking about gold. Well, Swing Machine was suggesting to get long gold 70 days ago. That was back on January 9th. You could have bought some gold. 25% at 27.47. That would have worked. And we got Bitcoin. What's Bitcoin doing? Now, Bitcoin's been short. It's ripping against the short, but it's been short. Look at Ethereum. Ethereum been crushed. Those were supposed to be digital gold. That's nonsense. Digital gold, like digital art, digital. What a joke. It's a joke. Um, we can change this to a weekly view. Let's put it on a weekly for the weekly investor. This is going to make you want to puke. It's this difficult. What's difficult is making a decision and understanding where you've made it. Actually, the weeklies aren't as great, but particularly on gold, they are. Here's the ES. It went short just 5 weeks ago. So on the weekly, it's just new. Now these are weekly trends. So when we see a weekly trend short, that's a bear. For us, they're in a bear market. We don't need to wait on of the formal CNBC definition of 20%. When these weekly trends, and they can stay. I'm going to tell you, kids. The weekly trend up lasted for years. Years. We don't know how long this bearish trend could continue. Now, we could get a rip against it, but this weekly trend could last for a couple of years, kids. It could. Now, within this, there will be these vicious rallies that'll suck in all the dumb money. And they'll say, "Oh, it's over," and as traders, we'll trade it. But look at gold. Look at when gold went long. 76 weeks ago, back on November, you'd be up 56%. One futures contract, you're up 123 grand. And let's go look at Bitcoin. There's Bitcoin. Bitcoin is long on a weekly basis. Yeah, long. And it's trying to get long again on a weekly basis. Ethereum is getting crushed. 11 weeks. And we'd have to put the continuous contract in on the interest rate. But we'll put these back. We'll just come up here. We could certainly do it on a monthly, which we won't. But let's put this back into all symbols. We'll put it all on 5. And we're going to do that, right? And come on now. Don't screw with me. Okay. Get a little... And then we'll put that 1 minute in here. I stop messing with these times when my computer gets a little angry. There we go. All right. So we're good. And where is this guy? We got to bring this up. Bring that up. There we go. So these trades, that are going in here right now, they're trading. The machine is not trading swing machine. We're choosing not to. We're trading something else. If you are a member, an annual member that's passing by and say, "Hey, Don, what is it you're running?" Just send me an email and I'll tell you what I'm running. And I'll tell you what the settings are. Happy to do it. And that's what we're doing. Pretty simple stuff. No TV in my office. No. But I do like, right? I do confess, I do think economics is a junk science. I don't have an economics degree. I don't. But I was a poli sci. My professional career was teaching surgeons how to do surgery for 25 years. So go figure, but I always enjoyed the markets, right? And they did too, by the way. Surgeons probably wanted to talk more, some of them more about market stuff than surgery stuff. So it was very compatible. But and then we've been doing this though since the early 2000s. Susan worked for IBM, Lotus Software, and it was in the technology arena, and so it's been it's a beautiful thing. You can get this tool, other tools that we have on your own desktop to configure in a fashion that that makes sense for you. And the possibilities are endless. We just encourage everybody that goes through the Q school to, absorb, go slow, go incrementally, go slow. Patience, discipline. We did make a video. We got some more to make of folks who've been sending us their scorecards. Thank you, Scott. Um, thank you, Daniel, Dickin, Alan. Been a number of folks. We'll just let her run. If you're watching this through YouTube, you can adjust your YouTube setting to 1080p, and that'll give you the best image that we can give you, or that YouTube can give you. And YouTube has it on a little bit of a delay, and that's YouTube. Of course, if this tool is on your desktop, there's no delay. We probably will begin putting this image onto we have a members website that you guys don't see. We have a stockmarketacademy.com website, but we have a members website, and we're contemplating putting some of these images up on the website, but we're not sure. So maybe I got to be careful there, both technically and in the demand. I want to come here. I want to show you another tool. So this is for option traders. This is another radar. So this is the Pebble. I love the Pebble. So this is populating right here, right now. Oh, okay. Yeah, I'm sorry. We're going to show you a couple, but this is Pebble. And this stock here went down some $18, but these are all triggered. These are all triggers today. And this gives you, we're scanning the entire S&P 500, more opportunity than one has money for. But if you know your way around options, this one sticks out at my thumb, or sticks out like a thumb, not my thumb, but what is this? Discover Financial. So let's click on that. Should look good. Yeah, that looks really good. It's going against the market. Now, whether or not you buy it, 100 shares is $16,000. That'd be quite a bit. What you could do is go down like around 160 and sell a put credit spread for 35 days if they don't have earnings. That could be a neat way to go. But this is where we get our opportunities. But we got a lot of sells here. This NVIDIA, they just keep trashing NVIDIA. Then we also have another tool, as we come across, we got quite a few. I just heard this. This is so crazy. I want to show you something. I just heard this from a podcast interview. What is this? Here we have the entire S&P 500, and we can sort with a click of a button, or it can sort automatically what stocks are over their 5-day moving average. So this tells us which ones are moving really, really fast. And so this is Fidelity, Netflix, and then this is the percentage over the 5-day, and then we can sort. And these are the stocks that are submarining, going down really, really fast. So you want to see which ones they are. There they are, including Amazon. So where you get them. Now we can do it on any moving average, right? Now what we have to do, this is a semi-manual thing, but we can find out the full number of stocks out of the S&P 500 that are over their 5-day. And then we plug it in here into the radar, and it'll give us the percentage. And we can do it for each category, and it'll tell us what percent of the stocks are over all their averages. It'll give it collectively. I just heard someone saying there's a hedge fund guy. He's worth billions. His name is Tepper. Tepper, you ever heard of him? And they said that Tepper has, what he does, one of the things that he likes to do is when the percentage of stocks over their 200-day or under the 200-day is at record lows, then you just want to buy the S&P. He's got $1 billion. That's when you want to deploy it. So I haven't plugged it in. This has to be plugged in manually. I don't want to take the time here to do it with y'all right now. We do it for our annual or all of our members, but we can get the overall breadth. So it isn't 10% right now. It's not. That's not real time. We have to plug it in, but it'll calculate for us. And so when the market gets up to like 70, 80%, everyone's in the pool. Oh, you want to get the hell out. That's simple. It's the Rodney Dangerfield of Caddyshack. They're buying, they're buying, they're buying. Then I'm get out, get out, get out. This is on a daily basis though, right? This is like hitting the side of the barn and you use options to do it. But it's a beautiful tool. This is, let me go here. I want to show you the options tool. Let's see what it is presenting for us. Let's see. We got many. This is the options club selector. Here it is. So this is another radar. Here's the S&P 500. You can put in any stocks you want, and then we can sort it manually. And then this is what it's telling us. Now be careful. Don't rush out and just, go throw money at this, but you might want to put them on a chart and take a look at it. But it actually gives you the configuration. And then if we click on this side, it tells us what we might want to be doing on the dark side. And if you click on this one, it'll give you your iron condors. Now, where you place these options and how you want to place them, excuse me, is still up to you, and we can review during Q School, what we like to do. And Susan's got a little different style than I got. But we will use options too, right? And then if you're using price charts, range bars, we have another tool, and because it's really important to get the right brick size. So this tool is the brick box and range bar dynamic calculator. So what this does, just to show you, let me get a drawing tool. And so if you are an intraday trader, it gives you, if you're trading the ES, the brick size, or the NQ, the suggested brick size. If you're a daily, it gives you the daily size. An investor, it gives you the investor size. The biggest mistake that people make that are trading these style of charts is they're not sizing the bricks properly. And the mistake that we see them making over and over again is they make them too small. Generally, I mean, So we're very systematic in what we do and how we approach our trading. We can go back here. Now, this is, you can set alerts on this. This is a ES chart, and it is a Renko chart, and you're seeing the C points. Now these C points show up. Let me just show you. This C point long shows up when this brick opens right here. You see that right there? That's when that shows up. So could you have played for one brick? Yes, we can look at that and historically and say yes. And by the way, what is the time frame on that? That is back in that was April 9th. Okay, so the market's really been moving, giving us a lot of these. So could you, that one brick is worth $1,000 on a mini. A micro is 100. Could you have made this one? Right? Because that showed up there, right here. 2, 3. This is a C point down. This red one shows up right here. Could you have made one? There's 4. There's 5. There's 6. There's 7. There's 8. There's 9. There's 10. There's 11. There's 12. There's 13. There's 14. There's 15, there's 16, there's 17, there's 18, there's 19, there's 20, there's 21. Now, it's possible in here, it is possible that there could have been a couple of what we call phantoms. So, not going to say that all 19, that you wouldn't have had, but there's a possibility that they could. I don't want to get lost into the construction, but not likely that there would have been that many. Maybe one or two that you could have lost, but you would have lost at most. You would have lost 2.1 bricks, but still would have done just fine. Now, sitting here waiting for these things to populate, would get old. So you could set those alerts to go to your email or go to your phone. And whether or not you use a futures contract or use an options, I think the biggest frustration here would be that you'd be leaving a lot of money on the table. And there's other techniques that we could employ. I'm going to erase these here. But we love this chart because it really shows us the price action beautifully. If we go to Swing Machine for stocks, which we can do, we can come here. Let's see, daily futures, daily ETF. There's my stocks. Looking. I think we got it. I know I'm not seeing it here. Here it is. So this is Swing Machine for stocks on a daily. So I'm going to just sort all 500. All right, so this is the percentage return. So Moderna went short 204 days ago. If you did short it, you're up 80%. If your broker had put you in Moderna and you plugged it in and you would have said, hey, knucklehead, get me the hell out of Moderna, you would have saved yourself an 80% decline. Of course, he would have got it in with some sort of bullshit narrative story. It's going to do this, and it's going to do that. Who cares? Right? Who cares? If money's going in, great. If money's going out, you could have the best story in the world. So we don't buy stories, but that could have saved you. So that was 204. Here's some other ones. Now I think this company Newell, by the way, that's Rubbermaid. I think that's going to be a good investment. I do. But look, 52 days ago, bitch is down 54%. 52 days. But what I will do is I'll take these and I'll copy them and paste them into a long watch list, right? And I might then change the interval from a daily into a 240. And then I'll wait. And then when they start coming back up, now some of them are going to come back up. Some of them are going to go bye-bye. Right? They're going to go away, but or out of business. But if that comes back up, then I might start to invest a little bit. But this Newell is down, cut in half from a $9 stock. And it's Rubbermaid. I don't know what the story is. I might want to know if I'm going to invest. I got time. Then I might want to know a little bit of the story if I'm going to go out a year or 2 years. But I might. I'm not saying right here, right now. Sorry. somebody, could somebody come in and a billionaire and opt to buy out the company? That's what'll happen. Creative destruction. Here, Tesla went short 51 days ago. So, but let's scroll down. You want to know, out of the 500 stocks, how many is he profitable in? So there we go. We can see it down there. See it? So let's keep going. So you can see it right here. I got this blocked out a little just to dress it up. Here are some longs. Here's Newmont. Newmont gold miner went long 28 days ago. You're up 27%. I mean, are you subscribing to some service? You have the service. You have the tools. You don't need me to point them, out unless you're a monthly member. Then we have to show you at night. But if you're an annual member and you have these tools on your desktop, plug them in, scan them, set your own alerts. They're right there. 28 days ago. Oh, and what's this? This is Philip Morris. They're going there to why is Philip Morris up 28%? Because they're not worried about getting a return on their money. They're worried to get the return of their money. So we'll just go park the money in a tobacco stock for right now. Defensive. All right, so let's keep scrolling down though. Right, we'll keep going. So out of how many stocks we're long and short, keep going. They're still profitable, 20%. And some of these are just days, some of these are weeks. Let's keep moving. You can see we're still up. We're looking at this one right here. Still profitable. Profitable. Keep going. I don't want to make you dizzy. So out of 500 stocks, Swing Machine is profitable in. Okay, so the yellow ones mean we're flat. So out of 404, over 400. The yellow ones were flat, meaning they're not, and then we still got a few greenies, but now we're getting the red ones. So what's the worst we're doing? So we get 100. We are suffering some drawdowns. He will, and that's the worst one. Humana is down 11%. Makes sense. All right. So we'll slide back. A lot of different things. And this is the way we approach our business. We're trading as a business. So I'm not interested in getting in arguments with, oops, what did I do there? I hate when I do that. No, wrong one. I don't know why that just looks noisy there. So I'll just cover up my Microsoft bar there. Oh, it just did it again. I don't know why it does that. Zoom. We're going to be losing Zoom here shortly. I think we're gonna go to StreamYard, and we got some other annotative tools we're gonna use. I think that's where we're headed. Got some other things. Makes sense. So this is really only the second trade, and see, the machine doesn't think. It doesn't like, oh man, I can't go now because I missed it. Oh, I think I better take the money now, because it's not thinking. It's just doing. So, I describe things, but I'm not thinking this much about the market every day. God, no. That's why we do what we do. I don't have to think about it. Trump's thinking more about it than we are. But here's the yield on the 10-year Treasury at 4.34. They're probably, the Federal Reserve is probably not going to let rates get over 4.5. But look at gold. I think gold could go up to $200 a day. I mean, it can do it. I just want you to know when it made its run from 1,500 to 2,000, it did $1,500, $1,500 day after day after day, right to 2,000. So if this gold wants to get to 5,000, it will just keep doing it. Money will just keep pouring in. Now, this is also problematic. Now, think about this. There's only so much gold in the world. Do you know that gold trades in derivatives and contracts and whatnot 20 times the amount of available gold every day? Isn't it crazy? It trades 20 times the amount of the available gold. So people are buying and selling the paper back and forth. Well, with contracts and what had been happening is the billionaires said, you know something? I think we better take delivery. We better get the metal itself. So they start taking delivery, then they're like, oh, not that much out there. And guess what? It starts really moving. Mm. I just want to say thank you for everyone coming by. DT Tom, good to see you. Um, Other folks that we've gotten a lot of phone calls from folks interested in the Q schools. Um, April is coming to a close, but it's been full, is full. May, we're every month, we're underway. Um, just We usually start on a Monday. It's usually 3+ weeks. Um, I just don't assume, because next Monday, that that we have a spot for you. So if you're interested, be sure to reach out to us so that we can start when you want to start and get it in. If you're having difficulty assimilating, or not assimilating, um, putting together, a 3-week period, let me know. We try to flex, and we'll try to accommodate everybody, because a big part of this trading game is also how does this fit into our lives. I love this, right? I love it. Um, so I enjoy this as much as, I hate to say it, I enjoy it as much as golf and fly fishing. It's just a hoot. Um, and So I just love doing it. Um, but you don't have to do it all day every day. And how it fits into your life is as another part of Q School. I used to think, and it was erroneous, that if I didn't have money at risk, I wouldn't make enough money, or I wouldn't make the money. So I always felt like I had to be risk on, and that's fallacy. You don't have to do that. You don't have to be in all the time. You do have to, have risk. It is commensurate, but you don't have to be doing it all the time. You pick your spots. The way that we have configured this trading robot, I can discern and know that it's guaranteed to win on that trade. By the way, it's guaranteed. Now I don't know how high it's going to run, but it has some dynamic exits that will protect that profit. So I'm totally relaxed. I hope you guys are too. Um, I don't I don't know what tomorrow's payday is going to be. I don't know. I don't even know what today's payday is going to be. So, this is also what's different from a trader, right? If you're in a typical, this is not typical, right? This is not a typical job. If you're in a typical job, you put in so many hours, you punch a clock, or you work for a company, they pay you so much, you get a bonus for so much, you do, um, you got to do the conference calls, you got to do their bullshit paperwork, you got to listen to their bullshit bosses. I had good bosses, but for the most part, I had a couple of wackos, but um, truly did. Um, but here, you're the boss. You know what markets you want to trade, what leverage you want to trade, and then we could just shut down. And I have to go find something else to do. You put together 20 days, and you start making not $100 a day, but you start making, 1 or 2 points a day. It don't take long. The biggest concern I'm going to have, and I say this to everybody, the biggest concern I'm going to have is that you're going to over leverage. You're going to come in and you're going to say, well, no, wait a minute. I could have got, 10 contracts on. Um, Now, in this increased volatility, they are all the brokerages are reducing intraday margin. It's the responsible thing to do. You shouldn't let the brokerages, dictate that to you. You should be doing it yourself. That these positions, we got micros on. We got five. They're five. It's not a full mini. So five little micros, half of a mini, scalable. It's fine. So we'll be nearby. If anybody's got any questions, you want us to plug anything in a particular stock or a particular market, just let us know. I'm happy to do it. And again, if you are an annual member and you want to know the program that we're running and the settings that we're running, you just drop me an email and I'll happy to tell you. I was just watching a golf video. I'm working hard, folks. I'm working hard. Um, and it was of Tom Watson, and he changed his swing to a particular style. And but I was curious, and he was 42 years old. 42 years old when he dramatically changed his swing. He said he that's when he really learned how to hit a golf ball at 42, right? Now you would have thought Tom Watson, I mean, British Open and U.S. Open. I think he won the U.S. Open. One of the greatest golfers. And here it was. He had learned the golf swing at 42. Um, you're not too young. You're not too old to do anything. You're just not. Just don't put those. Other people will put constraints around you, on you. Don't put any constraints. You're not. Okay, so I did not take that trade. The machine took it. And so I didn't write down our beginning balance here. I should have, but I can recalculate it. And but I've got a decision to make. Do we keep trading? I mean, it's Monday. We can, um, but let me just do some quick math here. 681.6 minus 2307.60. So our beginning balance, I write it in, was 33,774. We're trading not a mini. We're trading 5 micros because of the increased volatility. And so let me write that in. We've left the machine on for right now. We'll see how it does. But we don't have to run all day, right? Tomorrow's another day. Weekly beginning balance. 33. 774. Now, when we look at swing machine, you could have today on the 5 minute, if you got short the NQ at 910, you'd be up 3 grand. If you did it with a micro, you'd be up 300. The NASDAQ, 939, 3,500. If you did it with a 5 minute, the 5 minute get you in earlier at 720. 935 on the Dow, 935. They were in a selling mood. Gold, this is from Friday. They're long. Now, gold, let's just change gold here. I'm going to change just gold. I'm going to try. Can I? Yeah, I can put it on a daily. So gold is pushing into euphoria. And I should hide the date here. Let's, so we get some room back here. Data. Here we come here, show hide plots. I'm going to hide the entry date. I'm going to pull that out of there. So we get a little bit of room. We can see the euphoric column. So it's getting up in there. So what does that mean? It doesn't mean that it can't go higher. It can go higher. It can stay in euphoria for a long time. But the probability is on a daily basis that she's going to pull back. And she's going to pull back pretty hard. She's going to probably pull back to that 3190, 3200. That's a couple hundred points. So if you're long gold, congratulations. If you're long gold in the GLD, there are some things that you could do. You could sell some in the money call options. So for the pullback that offers you some insurance, you get too greedy. Aggressive traders can begin to think about maybe aggressive traders on a daily basis about maybe constructing some call credit spreads and for the pullback, because there will be a pullback in the gold, but we'll go ahead and put it back in there. That won't be the easiest trade, but we'll put that back to a 5 minute, and then we got to do this. And do that. So it's not even noon yet on Monday, and we're to the good. Trading 5 micros, 2,300, and we got all week. Right? No, we don't. We're not going to work on. We're not going to trade on Friday, so we got plenty of time. Now, one of the things that I might begin to do is when the machine gets in and if she gets in and she runs up 5, 6, 700, maybe I choose to intervene and scalp it and get myself to where I would like to be for the week, and then do what? Shut down and go do something else. I'd like to drag into view. If you haven't seen this, we made a video of this. I'm going to pull this over. I just want to make sure that I'm not disclosing any private information. Not, but this is one of our newest members. He's been a monthly member now for a few months, and he's in Q School. It's Daniel. Check this out, right? I'm going to bring this into view. I think I can without, make sure there's no, I think I did. So this gives his whole score sheet for the week. It was Monday through Friday. I'll just kind of give it a glimpse. But here's his weekly tally on last Monday. And he was trading 1 NQ, 1 ES, and 10 euros. That's proportionate because it's the same margin, right? That's what he was trading. His P&L for Monday was 25,851. 25,851. He had a profit factor of 647. Um, that's tremendous. Means he was making $647 for every dollar he expended. Tuesday, 1356, profit factor 30. Wednesday, 623, 2.27. 3267, profit factor 7.4. Friday, 957, nothing to sneeze at, profit factor 1.40. For the week, he did 32,000. How much is that? 32,000, rounded off, and profit factor 10.22. That's what he did. Now, not only did he do it, he kept very detailed records for him. It's going to serve him so well. So the question is, do you have it for last week? Do you have it for last month? Do you have it from a year ago? Are you just coming into the market every day? And I hope not, but if folks are hearing us for the first time, probably not the folks that have been here, but and just, buying and selling, selling and buying and just keeping score on the money. Mm, It's gonna, it's gonna run its course. But Daniel, he's approaching it. It's his business. He was trading Swing Machine too, by the way. That was what he was doing. And he did have some other tools, right? He does have some trading experience. He had some other tools. And so he was using, in tandem, which we don't have a problem with. If a person wants to incorporate other down the road, it can be something that if it is something that can be programmed, we can program it. Okay, this is the third trade that it's gone into. It's also gone in short again, right? So, this is where it can be difficult for a retail trader because the thought is, I've missed it, I've missed it, I've missed it. I haven't missed anything. You know, the machine doesn't have any of those emotions, and it's just going to short again. And now we could intervene here. I am looking, and it looks a little extended down here, but machine's got it. If it loses, it loses. But the other part is there will be a bounce. May not be today, might be tonight, might be tomorrow, but there will be a bounce. Um, as long as I leave the machine on, it will catch it. I hope it's not here. Could be, and I could lose a little of our profit. But meantime, we'll let it continue to run. When I look at swing machine, the VIX is still, it's very elevated. The fear is palpable here. Now, and another thing that I could do, either later tonight, we'll probably turn this off here very shortly. The trading robot. We'll see if we can get another one under our belt. But one of the things that we could do is throttle back the leverage. By the way, I there are not 5 micros. There are 4 micros. So I thought there were 5. There's 4. I should probably correct that. There are 4. Oops. See if I can do this here. Oop. Maybe I'll just erase the whole thing up there. Now you can see a little bit on the NQ, and we can see a little bit of pressure up. Now that pressure might be just coming from trailing stops. That's other people's machines or hedge funds machines, beginning to punch it up. We can see it. The program is short. I'm going to let it handle it, And if we can get profitable, I might intervene. But what I don't know is if there's a vicious rip back coming, the machine will take us out from the short and get us long, and hopefully, cover up the loss and add to our P&L. And we'll see if it so we'll see how it plays out. But you can actually see it. We're starting to roll in here on the 1 minute. The probability is that this little bounce will fail, right? So, um, but we'll see. We'll just let the machine. So this is where I um, you know don't have a lot of angst. I don't grind on it. I'm not trying to stare a chart down. I'm just giving Swing Machine a casual view. I understand what the program is doing. I can see it. Just kind of relax and let it play out. I think as a trader, and I don't want to be adding to it. I'm just describing it. For me, for me, it is meditative. I don't even like, I'm reading a book, I'm listening to music, I'm chatting with you guys, but I'm not trying not to chat too much or think anything about it. It's very meditative. I'm not thinking about the earlier trades. I'm not thinking about where the trades are going tonight or tomorrow. I'm not doing anything like that. Just making sure the electric stays on, the internet stays up, and we got backup provisions, and just collect the cash flow. End of story. You know the economic discussions, the political discuss, not really political, but political economic type decisions, or discussions. Those are just academic. It's just got nothing to do with nothing. If you're following these people, getting into, quad one, quad two, quad four, we got that DiMartino booth. I mean, she was just a media hack that got a job at the Federal Reserve. She's what I call a Fed sniffer, like a jock sniffer, just, analyzing every little thing the Fed says and does. I mean, just total garbage as far as I'm concerned. Nice lady, read her books and everything, but just garbage, garbage, in terms of trading. Okay, everyone. This is trade number three since a little bit before midnight, and so we're going to let it continue to run itself out. Um, what I'm going to do though is this will be probably the last trade, right? We're not going to push it out, and we'll see where we are, and we'll try to give everybody a view. I'm going to let you all watch up until about 1 o'clock, and then we're going to need the computer resources. So we'll let you watch up until about 1. But this will probably be the last trade. Now, this thing could still accelerate. You know, we could be eager to go down, or the market eager to go down. And we got some really really good tools to, when the market goes down and revisits those lows. What we're interested in, is it going to make a new true low, or is it going to make a false low? If it makes a false low, there's going to be a hell of a trade coming back the other way. If it makes a true low, we could be going a lot lower. And so this is certainly a blue Monday for the bulls. And this is where now the retail crowd, and I hope you guys aren't part of this, but where what they're doing is they're just simply checking their account values. And when they check their portfolio values and their account is up, they feel good, and they spend money and everything's right with the world, which has been the case. But when they call now and their account is down, it's got to be down at least 20%, because the indices are down 20, but there'll be individual stocks that'll be down 50, 60, 70%. And they're not going to feel so good. And it's going to be the reverse wealth effect in aggregate, and they'll begin to pull in. you know they won't buy that car, they won't buy that house, they won't buy shit, and they begin to pull in, and it becomes a self-fulfilling prophecy. It's the reverse of the wealth effect. My contention always was in '08, and the Federal Reserve said, we're out to create a wealth effect. Well, how dishonest is that? You know, a wealth effect, as though like a sound effect. How about we set up the conditions where folks can create real wealth, real wealth that they can hold on to, not ephemeral wealth, which is debt, which is, a ghetto nation, a ghetto mentality. There's no racial anything in that. There's a ghetto mentality that you know got to have all the things, but it's all on debt, right? And so that's coming in. Um, our job here again is to extract the cash flow, but we also serve a purpose, because if you don't have traders and you don't have speculators, you don't have a market. You don't have a market. You just got bubbles and crash, bubbles and crash. And it's still functioning. It's still orderly. It's still very orderly. And but she is certainly retracing. The VIX is on a 5 minute is long since 9:40, so the fear is still very, very palpable. If we intervene and grab this trade, I'll let you know. Otherwise, we're going to let the machine handle it. And if I turn it off, the strategy, I'll put a note on the screen. I'll let you know as well. Once again, if anybody wants us to plug in any market, any stock on any interval, just let us know. Happy to do it. The most sensitive part of Swing Machine is this ball flight right here. This ball flight, you'll see it, and we saw it, right? A little bit of buying coming in, but that little bit of buying was just, which it is many times, it's just other machines just trailing out their profits. Eventually there'll be a little bit of a bounce, right? There always will be, but this is the most sensitive, and but this is the driving force. It is a trend identification tool, and this is the driving force. And the trend is solidly down on the 1 and 5 minute. Once again, we're getting little buys, and we could use that as an excuse to go in and to grab this little profit. We'll let the machine run it for right now, but you could. It wouldn't be enough. I wouldn't try to get in there, and maybe we will. Let's be a little more greedy here. So I'm actually going to turn the program off right now, and I'm going to close the trade. Right, probably going to continue. So the program is now off, and we're in the house with $2,714.40, and tomorrow's another day, right? And we don't have to, it's you don't have to run this like an oil derrick. You don't have to do that. I mean, if you choose to do that, that's up to you. But um, so let's do a couple of things here. Oh, I wanted to write in here. Program is now off. Now turned off. We just turned it off. It's your prerogative, but we'll let you watch, okay? But there'll be no more trades in here. We're done for the day. Very nice day. Very nice day. We put up another nice day. We're going to have had a nice week, and then we wait for another week. And now we have other things that we trade. We have other markets, we have other tools, and we have options, and we're participating, but we're not going hog wild, and we're not you know betting the ranch on gold, or doing that sort of thing. Any questions, you let us know. Thanks. We're going to go ahead and mark this up a little bit, and let's take a look at the VIX, and we'll do this. Painter green. The VIX right here goes long at 940. That is a warning to our members that they should be favoring the short side. If you've been trying to buy since 940, probably haven't done very well. Swing Machine is just really, really good at it's good with entries, but it can also just help you stay on the right side. You might be doing something entirely different. We got a whole host of other tools. We have many a member that will use Swing Machine as a filter to stay on the right side. They just don't want to go against it. Maybe you're looking at something else. So this ES is short at 910. One mini, you're up 4,700. 10 minis, you're up 47 grand. One micro, $470, right? We'll stay with the 5 minute on the NQ. Everyone loves to play the NQ. We do too. It is the crazy aunt in the basement, 6,800 at 720. That was earlier. The Dow, even the Dow, no place to hide in a correction or in a bear market. The Russell just continuing to bleed out, just getting killed. Gold, look at gold, $10,000 today. Oops, that's not red. That's not red. That is supposed to be green. 10 grand. We got a lot of members that are long gold and have been long gold. Now, yes, Bitcoin is having a bounce. We're getting a kick out of it. We see it on the Twitter sphere. That guy Tom Lee with the big black glasses on CNBC. He changes banks. More than I change my socks, I guess. But he's always working for a different bank. But one bank he's pushing is always Bitcoin. Yeah, Bitcoin's going to be like gold here. Yeah, okay, Tom Lee. Okay, so you can see the little bounce coming, right? And you may be seeing it on your charts, but we can see it right here. And it's the 1 minute NQ. She's bouncing a little, and it's machines. It's trailing stops going off. The likelihood is it will fail. Can you make money on those trades? Sure, sure. Are we going to get in there? No, no, no. I mean, we're done. But it's possible, that could be the near term bottom for today, and that we rally out this afternoon. That's possible, but the likelihood is that she'll resume back down. But you can see it actually on the 1 minute. If we had the other ones on 1 minute, you can see it on the five. But the 1 minutes are starting to roll in. Middle of the day makes sense. 12:15. They're at lunch. Okay, let's bring them back. It's like water. It's just money flow. Once again, you can see the buying coming in on the 1 minute NQ. You can see it coming in. Now, we're not going to take it. Most likely will fail, but then again, one of these will catch. And but we've turned our little program off. Let's see here if she would have taken any of these trades. No, no, not yet. Nope. Mm-mm. Okay, I've just taken a little manual counter as they're trying to bring it back up. I'm going to scalp it. I did not do it with 4 micros. I just did it with two. I don't want to do too much damage here. And but as we're together, I'm like, yeah, that looks like they want to try to bring this back up. Don't anybody follow me necessarily, right? Don't. That's not why we do these YouTubes. We do the YouTubes just to show you that it can be done, to create some awareness of who we are, what we're about, an approach. But we're not trying to prove anything. We're not trying to hand out the fish. Just showing you what's possible. And if you'd like to get these tools on your desktop, you can do that. I'll let you know if we take it off here. Just a little counter trade. Not going to pay a lot. So as we give you the play-by-play here on the NQ, you can see the 1 minute right here. We'll just point this out to you and so give you a view of what you're looking at. Let me get a marker. So the 1 minute right here, 9 minutes ago, right in here, does what goes long right there. What type of trade is that? It's long, but the 5 minute is short. This is a counter trade, a counter. The 5 minute is in fact ripping against, it's ripping against the short. Now, it's most likely going to continue short, but it may not. This might be the start of a turnaround. It might be. And you can see on the 1 minute, the trend is solidly up. And here, the 5 minutes actually telling you, you don't need to look at a chart if you're getting a case of vertigo. You know, we might be headed back up now. Holy crap. Well, what happened about the macros? It don't matter, right? We chat about macro and just to chat, right? It doesn't matter. The other piece of it is if it doesn't matter intraday, why does it matter at all? Right? Um, it really doesn't. Okay, so this is just a little counter. We didn't do it with four. We did it with two micros, $64. Okay, now you might say, that's nothing. But, do you have the patience? Do you have the discipline to learn? Could you come in here and just pick one of these off a day and net yourself $100? Do you have the patience to do it for 20 days and then go do something else with your day? Brush the pool, walk the dogs, play with the kids. You know, um, if you do $100 a day for 20 days, it's an extra 2 grand. Okay, it's not going to be enough to live on, but might be a little added income. And you do that for 6 months. You're like, oh, okay. Now I got myself 12 or 13 grand. Oh, okay. And you learned a lot. Do you have that patience? Do you have that discipline? I don't know. It's up to you. So what else do we see, right? Just we see the 5-minute VIX dipping. We see the 5-minute ES ripping. We see the 5-minute NQ ripping. We see the YM ripping, ripping. We see we have the 1 minute here. We don't have the 1 minute here. So that means this is coming back up against those shorts. Why would they do that? Machines, machines. Somebody put on hundreds of contracts. So, hey, let's go get that cash. Let's go put that in our account. We'll come in and play tomorrow. That's what they're doing. And what are their machines? If they're short, what do their machines have to do to realize that profit? They got to buy. Now they can do it also. Where else can they buy? They can buy in the options market. Now, if you put on so much leverage that you can't look at your gauges, you can't look at the dashboard because you can't get your eyes off of that money, then you're trading too big. You're using too much leverage and you're trading greed and fear. Just think of it this way. You're in a race car, right? You're in a race car and they tell you you're going to drive around the track at Daytona 500. And they instruct you to look at the dashboard and look at your speed and look at this, look at that, whatever it is, right? And you start moving and you're not ready for it. Now, if you're driving, 30, 40 miles an hour, 50 miles an hour, you're probably, you're fine, right? You'll be looking at the dashboard and you'll get yourself around. But you're like, hey, you know what? This is the Daytona 500 here, and I got a chance to drive 250 miles an hour. And you decide to slam it down, maybe not even all the way, and you start driving 250 miles an hour. Are you going to be able to look at the dashboard? No, no, you're going to be scared shitless. I would think, maybe not you guys, but me, I would be, right? Be like, holy crap, this stuff is flying by me. And so I wouldn't be focusing on what I need to be focusing on because I'm picking up on the speed. I'm picking up on the money. That's why 90% of retail traders lose because they think like Davey Day Trader that it's all about the money. Yes, we are out to make money, but we're not trading the money. Oh, just kid. Davey Day Trader, he's not having a very good day today. It's kind of funny. He just tweeted out, and I get a kick out of it. That's Portnoy. He might be a hell of a gambler. I don't know. Or either that he's just, one lucky, um, you know, one lucky guy. Because, I mean, he has had some fortuitous things come his way, but not taking anything away. But when it comes to trading, he doesn't know his ass from a hole in the ground. I'm sorry. He doesn't. He does not. And he tweeted out, is Bitcoin, is crypto decoupling? What? What? Decoupling from what, Dave Portnoy? What was it ever coupled to? Nothing. Zip. Nothing. Come on. Decoupling. Please. Maybe, I'm not going to go in and start commenting about, horse betting or, betting on this or betting on that because I'm not a gambler. But to have someone like him coming in and you know start offering commentary or what he's doing in the market is really kind of beyond the pale to me. But whatever, people follow it. I tell the story, and it's true. It's a true story. Something that I did back years ago. It was in the 2000s, and we were still working and trying to find our way on some things. And I had a specific approach. I was trading stock, and I had a specific approach that I wanted to do, a trading discipline. And I told Susan that, for all intents and purposes, I was going to lock myself into the office. Not, I came off for dinner and slept and whatnot, but in other words, I was going to, and this is what I was going to do, and I had it all written out in what I was going to do, and and I was going to do it for 3 months, come hell or high water. That's what I was going to do, and I did it. I did it. I had a little over 600 trades. Probably was trading too big. Wasn't trading options. Um, and and I won on about 420 or 30, and I netted for the 3 months, and it was in size, but I netted. I remember the number was about 75 grand. And when it was all said and done, I said, Susie, I'm done. And she didn't know from day to day what the result was. And so when I told her, she said, beautiful, that's going to work, great. And I'm like, no. And she looks at me like, what do you mean, no? I'm like, no, Susie, I can't do that. I'm going to be a blithering idiot. I mean, I was glued to the screen. My eyes were glued to the screen. I literally made every decision to get in and out on every single trade, over 600 of them in a 3-month period. I said, I'm not going to be able to do that day in, day out for the next years to come. No way. No way. Plus, it wasn't a real efficient use of capital. To which Susan said, okay, well, then what? And that led us from, well, we can do it, but we're going to program it. We're going to program the strategy. And we're still okay on this trade a little bit. We might end with a bogey, and that'll be okay. We took a stab at it here. She's still barely holding. We have just two. So we have a little stop in place here. And that led to a program that we call the Pebble Beach Radar and the Pebble Beach Strategy too. And it's beautiful. And we wrote the program. Together. It took us. Now we could probably do it a lot quicker today, but back then it took us 3 months just to write the code, to get it to work right, to do what I was doing visually. And it's absolutely beautiful code too, by the way. We've used it with other things, but it was really, really good, elegant coding. And so that's also another radar. We don't show that as much. We probably should. And one of these weeks we'll have an option week, or a shark, like if they have a shark week, we'll have option week. And that tool is just beautiful because what it enables you to do, you don't have to be tethered to a screen or even tethered to the computer. You can, and then if you're using options, you can really maximize your capital. It's a great tool. And she is barely hanging here by a thread. So this, we went against it, and it was a counter trade. That's why we only used two. Only used two micros coming back up the other way. If we caught it, we had a little run up of about $76, and now we're running back. We're not going to let this thing go to crap. And this will be our last trade together. I said we would need to sign off at 1. We'll see if we can get a little bit of a bounce and finish on a positive note, and then we will have to break away. In advance, I want to say thank you for stopping by. I hope you're in one piece with your portfolios. I hope you've taken some precautions. Um, I hope you're trading, you're getting it done. If you're not, that's why we do what we do. Just to let you know that there's other things out there. We don't see anybody. We're on the Twitter sphere. I don't see anybody doing what we're doing. Nobody. Mm-mm. No, not even the tasty crowd. And they work awfully hard. They do a lot of option stuff, and I get the gist of what they're doing, but they're working awfully hard in our view. And so I don't see anyone doing what we're doing. And our members also work very, very hard. They're very disciplined, very motivated folks, and and are very, very good. We are barely holding here. Okay, she is right on the cusp. We'll see if she can come back up. I don't see it on swing though, right? So we may bogey the last hole, which is, yeah, thought we could get cute here. Fortunately, I cut the margin back, which you can do, right? That's okay to do. Let's see if she can come back up. The trend is, and that's what Swing Machine is. It's a trend identification system. And the trend is very, on whatever interval you're on, especially a daily, it's really persistent, and if something's trending up, it's going to be really, really persistent. And in front of our eyes, gold has pulled back, right? Gold kind of peaked out up there at about 110. Remember, on the daily view, we did say for aggressive traders, you could be looking up here where gold was and be thinking about selling a call credit spread, maybe, um, maybe getting a put on, and look for the trade coming back. I wouldn't be, naked shorting gold, though. I don't think that'd be a good idea. If anyone wants us to punch up any market into swing on any interval, feel free. If you want to give it a real time, test. You want to say, hey, what is, I don't know. When did it buy or sell Nvidia on a daily basis or on an hourly basis? You feel free. You just punch it up in the chat, and I'll punch it in. Happy, to show you the baby. We don't get every single trade right. Nobody does. Not even Swing Machine, but we get our share, and he can help us. Get in, get out. She can help us stay in, help us stay out. If you're just saying at this point, you know what, as we were, I had to come in here try to get cute with a counter, but you know what, I've had enough of this, downtrend here today. I'll just head to the house with the cash and wait for the next bus, sometime tomorrow or maybe even tonight. You never know. They may be getting Trump warmed up, right? You may have to come out and have something to say, which is not even worth tracking because if you have it right here, I mean, we'll see it. We'll see it before he even walks into the room. Please show NVIDIA. Hey, Frederick, how are you? Frederick, yeah, happy to show. Frederick is a new, I recognize your name, is a new monthly member. So I hope you were able to get at the nightly video, and you let me know. So let's punch in for Frederick NVIDIA. So let me do that here. I'm going to come up. I'll just come here. I'll do it on the Dow. And so we got NVDA and on a daily. So let's put this on a. Oh, I'm sorry. I'm going to have to put it on a different chart here. I'm sorry. I'm going to have to go up a little higher so I can see this. Put this back to. Oops. At YM. Let me put this back here to a 5-minute. Let me come up here. So I'll put it up here. NVDA. Nope. There we go. So we're going to put this on a daily view. So Swing Machine, uh, Frederick went short NVIDIA 39 days ago at 126.63. Had a person gone short that, they wouldn't be up. They'd be up more. That's delivered 30 points, right? Because the purse is calculating a singular unit, being a contract. If we wanted to see the amount of money, oh yeah, oh yeah, yep, it works. Um, let me let me show you now what you can do with your stocks. So on Swing Machine, what we can do is let's change this to false. This is going to change the purse, and then we're going to say stocks. We're going to say true. And let's say that we can either put in a share count or we can put in dollars. So let's say that a person's got they had $25,000 in Nvidia. So we hit OK. So if Nvidia, if they had taken it short 39 days ago with $25,000, they would be up $6,000 right now, 24%. Now, of course, if you had been long, you wouldn't have had to necessarily get out, right? Um, what you would have wanted to do is you could do any number of things. It depends upon where a person came in, but you could have taken a little bit off. You could have gotten a put contract on you, or you could have sold covered calls. Now, this part of Swing Machine is we don't talk about it much, but it's beautiful, beautiful for options work. Um, and we do review this in Q. When Nvidia, if you had owned Nvidia on a daily basis, and when she got up in here into euphoria, like where gold is, you really need to take some action. What is that action? You need to ring the cash register, and you can do it any number of ways. If you had 25,000, maybe you take out your original investment and let it run, and then it pulls back. You're not feeling, at least you got your original investment. You could do something like that. You could also you could get a put on it. If she pulls back, you'd still have your bread over a period of time. Yeah, okay, and this is pulling against us here, so we got to be careful. You could also sell calls. All right, so I'm going to end with a bogey here. I don't want this to get away from me. Bear with me. I'm going to watch this very tightly here. Still think we're going to get a little bit of a bounce here, but Swing Machine's not indicating that, so I got to be careful. I don't want to, erode our profits just to erode them. So that would be a way to go, right? Let me erase that marker we just put up. No, she's just flat out selling out. So let's we'll end with a bogey. We'll try. She's, she wants to, she is trying to, it appears to us to trying to put in a little bit of a floor here, but not much, not much. We won't take it too much further here. And in the machine, I took a profit, and she actually just taken a profit now, another big fat one. So I would have been better off on remember the earlier short we had? I would have been better off just letting the machine handle it. So we'll see if we can get a little bit of a bounce in here and see if I can limit that damage. But thank you, Frederick. Let me go back so I can see if there are any other questions. Now, Swing Machine doesn't get every single trade right. I don't want to give anyone that impression. It's just that it can help you get in, it can help you get out, it can help you stay in, it can help you stay out. It's going to try to help you so that you're not preoccupied with making decisions day in and day out based on money. If you do that, it's just going to be brutal. It's going to be a hard, road to hoe. Now, on um, thought I heard the door open. I don't think so. We can even put it on a 60 minute. The 60 minute, she's going to populate. Yep. It was 16 hours ago. And it would have just 16 hours ago. If you just got short at 103, when CNBC and all the financial media probably telling you to buy it, and you could have picked up, 8%, on that quick trade. All right, so we're going to put the VIX back. If there's any other stock, let us know. You have to define, what it is you're trying to do, and with what. And what is the symbol, what is the interval, and what are you trying to do, and how quickly you're trying to do it, and are you going to be using options, or we'll bring this back up. There we go. All right, so I'm suffering a draw. I put this trade on, try to get cute, so I'm gonna probably take a punch in the nose on this. I'm not going to take it too far. And so it wasn't the program, it was me, a mechanical trade. Hmm. And we got squat going for us right now. There's nothing on here on radar that's telling me that this thing is coming up. So I just got to, we got another break spot, and if it takes it, it's going to take us out. That's why we draw a distinction between discretionary trading, mechanical trading, robot trading, and hedging. And you do need to have the skill set. It's just that I just think, right? I mean, at least for us, it's not something I want to be doing day in, day out, mechanically trading, making a decision, enter, exit, boom, boom, every single time. It's just going to get real old, real fast, having done it, right? That's, was my description. When I locked myself into the office, okay, this is what I'm going to do. And, it was a grind. It's a grind. And then once we were able to repeat that, so our first program was not Swing Machine, it was actually Pebble Beach. And then we had to go to TradeStation to do it, so we could get at the easy language to code it. So we had to learn. We had to, learn. I had to learn how. I had some coding experience. Susan had more, but I had to learn how to code it. And there was a lot of trial and error. And then once we got it done, took us about 90 days, 3 months. Then we're like, okay, let's go and start trading it. And they're like, this is great. Yeah, I wasn't working so hard. We were leveraging the machinery. And they're like, okay, well, and then we started trading options, and then it's like, oh, well, maybe what's this stuff about futures? Maybe we got to get involved in the futures. And then it's like, okay, well, maybe we got to build a tool. We can still use Pebble Beach for trading futures, which we haven't done in a while. We could do that. It's just that Swing is well, it's just much more sensitive. So again, I put this, we turned the machine off, the machine deposited the 2,700, the high profit factor. I came in here to try to get cute and try to get a counter in with two micros. And we're on the verge of getting punched out on this one. We'll see. We'll see if we can catch the bounce and get out of harm's way and finish intact. Thank you, though, Frederick. Frederick, again, welcome. So Frederick's new, and Frederick, on the
members webpage. I'm assuming you could get in there. That's where the nightly video is. Right beside the nightly video tab, there's another tab, and that shows a little video library of a lot of the algos that we're looking at every night. So you can explore those. I don't know, Frederick, your level of experience and what it is you like to trade, and so feel free to. This goes for everybody that might be a member. To let me know where you are, what you're trading, what your focus is, what you're trying to do, and I can make notes and try to point out various things that one can do. Um, and then, of course, there's no rush with anybody. Certainly not Frederick, not anybody. Um, Gentleman Daniel, who posted the fantastic scorecard last week. He was a monthly member for 3 months before he went into the Q school, and that's totally fine. And we don't pester anybody. When you're ready, you're ready. And um, we have another gentleman, David, in Germany, and David might be listening, maybe not, but he was a monthly member, oh, for months and months and months. And I reached out to him once. This goes back years ago. I'm like, everything okay? He's like, yep, everything's all right. I said, you interested in the queue? Not right now. I'm like, oh, okay. And then we just continued to grow. This goes back a long time ago, years. And then out of the blue, he just going, hey Don, this is David. I'm like, who's David? I didn't even remember. It was years. He was years as a monthly member. I'm ready now. And I'm like, okay. And we did the Q school, and he's been off and running ever since. And he's doing great. So again, what I'm looking for, I want to see. I don't see it. I want to see a little bit of green in here on this 1 minute, and that'll tell me that we got a shot at coming back up, and maybe I can limit this damage. And at this point, I'm not sure that I can get it all back, but maybe I can get a little back and not finish so poorly here. But there's an old saying, if you're with golf, you have no choice. You gotta, play to the 18. But when you're skiing, don't make that last run of the day. When you say, I'm gonna make one more run. Susan always would remind me, now, Donnie, let's not. Let's just get back to the lodge and have a hot chocolate or something. It's that last run of the day when you get punched. So if you feel that temptation, although I felt as though, that middle of the day, you feel that temptation to put on that last trade, between 3 and 4, don't take it. Just shut it down. Finish on a high note. Don't bother. Now this daily view on the S&P and on these indices, it's got to do something. We're hoping it does something very specific in what our members know to be a make a false low. But it's got to go down. It's got to get down and revisit the earlier lows, down around 4,700. Ideally, take those out and give us. And it's a daily setup, so it could take another week or two for that thing to set up. If we get it, if it goes down and takes out the low and establishes another true low, then folks, we're weeks away from being able to get set up again for a big sustained bull run. Can we get these one day runners or a few day runners and counters? Sure. Do you play for any black swan hedges in some fit? Not really. No, no. I used to. Thanks, Frederick. He's asking the question. Do we do any black swan hedges in some form? Hedges. Well, okay, maybe I'm glad I printed out the question. So I don't think I at first answered the question correctly. I was thinking, like, do we play for any black swans? Um, we don't play for any anymore. We used to monitor certain industries for black swans, like the airlines, like some of the um, oil companies and so forth. but we don't do that any longer. The very definition of a black swan is that you just don't know it's coming, and it just is on you. And so I'm not sure that a black swan can be played for. However, we do place stops on everything. Now, sometimes those stops are narrow, and then sometimes they're what we call just a prevent, in case of a black swan. Um, and we teach that, in Q school as well. Teach you how to do that mechanically, and it's critical. It's critical because if you're doing this with any degree of frequency, it may not be a black swan that gets reported on, but you could have a precipitous, drop that could, severely hurt you. And we want to have zero. We have zero tolerance for a negative outlier. Zero tolerance for negative outliers. They shouldn't occur. They just should not occur. If they are occurring, it's hubris. It's reckless. They shouldn't occur. Now we do play for positive outliers, right? That we try to put ourselves in a position for that. So we do guard, against that, and there's a number of ways to do that. Not just the stop, but there's a number of ways. And a lot of the trading robots have that. They'll have a stop, or they'll have it, and it'll be, what they call a prevent stop. Prevent in American football is like a prevent defense. You're gonna let the trade breathe a little bit, but you don't want the other team to score a touchdown on you. So you have something that's laid back there. Good question, though. So again, this trade here, I just want everyone to know, I turned the robot off. I thought I could get cute. I thought, okay, we're starting to see it getting a little bit here, just a little bit, right? Don't put on a trade. Don't. I'm trying to get out. I'm trying to get out without embarrassing myself here. I tried to get cute and I tried to pick off a little bit, and she pulled back. So I don't even need really a chart, but what I need to see is I need to see a little bit of buying in here, and then that'll tell me we're coming back. The market's very, very heavy, so I may not get it, and I have to be prepared to, to take my lump and head to the house here. We'll see if we can get it. But I put that trade on. What type of trade was that? It was mechanical trade, and it's important that you have that skill. You'll get them wrong. We get them wrong. I don't get them all right, by any means. And I would prefer to let the machine, be teeing them all up for me. I can let the machine do, in this case, what it did. The machine put all this in my account completely. I didn't intervene. I didn't do any. I intervened, I think, on the last one, ended it, and I would have been better off had I not. Um, So here we go. We're starting to come back up against the short, and as we come back up, that is going to help reduce my drawdown, and I'm going to try to, get to the sideline. Um, Now there will be days. There will be days that I'll come in and when I was going to go on these trading robots, right? So you can set them up so that they are entering the trades and exiting the trades on their own. You can do that, and they can have trailers, they can have stop losses, they can have all kinds of things, and you can run them in opposition to each other. The fact that Frederick, that you're here from Sweden, I want to show you the euro dollar trade here in a minute. That's crazy. Let me go do that. But when we run them, we can run them automated, where they're fully auto and going in and doing it themselves, or we can run it in what we call confirmation mode. And that is rather than going directly into our account, they'll pop up, and then I can decide to take it or not take it. I want to show you this. Let me do this. Let me add a blank row up here. This is, oh no. All right, I'll do it from here. I think I can do it from here. We just don't want to lose track of that other thing. All right, so we're going to put in the euro at EC. This is the euro contract, and we're going to put in the dollar. The dollar in this account happens to be delayed, and but it won't. We're not going to be trading it intraday, but we're going to put this on a daily basis. This is a fantastic, and Frederick, you are a monthly member, so you want to pay very close attention at night to this signal, because this thing pays and pays and pays. Here is the American dollar on a daily basis went short 46 days ago. 46 days ago at 106.25. Now, one mini contract is about $2,000. That's what you would have needed in your account to take it short overnight, and you'd be up 1,900. Usually they're within a day of each other. In this instance, the dollar goes short first, and then the euro goes long 34 days ago at 107. At 107. You're up 8.2% between the entry price and where it is, but a euro contract costs you overnight around 3 to 3,500 or so, thereabouts, depending upon your brokerage and margin and whatnot. So I'll leave that, but that's roughly. So a $5,000 investment short the American dollar long euro would have returned about 100%. Now, when we look at this on a daily too, though, see, the dollar is almost in panic sell. It can go lower, it can, but I wouldn't want to be initiating this trade now. No. And the euro is at 80 here, almost in euphoria. Can it go higher? It can go higher. But I got to tell you, if the euro gets into euphoria and the dollar gets into a panic sell, I would close this trade, and I'm going to try to go the other way. And we might drop, the dollar. I mean, there won't be any super rush to do it, but this pair here like this, we've just had some phenomenal, you get some phenomenal trades during the course of the year. So don't, you're in Europe, you guys in Europe, track your currency values. Here in the States, not the folks that are here now, but most Americans have no understanding of what the dollar is. They just don't get it. They don't understand value. And as a case in point, so I'm gonna delete this if you don't mind, but and we can bring this back up. None other than back in 2009, you can go and research this or see it. Glenn, not I was to say Glenn Bernanke, but no, it was what was his name? Bernanke's first name, Ben Bernanke. He was the chairman of the central bank in the United States, and when he started to launch QE and stuff, he was interviewed by one of the the wizards of smart we have a show called 60 Minutes, and just some sanctimonious puff bag Scott Pelley, and he sits there and he bites on his pen like he's some collegiate professor, and he's just a dumbass. And he said, doctor, calls him Dr. Bernanke, Dr. Bernanke, a lot of people say that if you do QE, that you're going to have inflation, and you're going to devalue the dollar. What is that going to mean, Dr. Bernanke? Can you tell everybody on CBS, you know? And he said, oh, that's ridiculous. This is Bernanke talking. You can see it on YouTube. That's ridiculous. We're not going to devalue the dollar. The dollar's a dollar. He goes, the only time that you might, see a difference in the value of the dollar is if you're going on vacation and you're on the streets of Paris in some little cafe having a bottle of French wine. Then yes, that French wine might cost you a little bit more. Oh, is that? Oh, thank you. Thank you. You're so smart, Dr. Bernanke. We all feel so better about what you're doing now. Can you believe that? I mean, that you got to Google it. If you don't believe me, you see it. And they said it. I mean, come on. Come on. Obviously, he knew what they were doing. What an asinine, but you know what? The American people, whatever. Oh. So they have he created back then he created the wealth effect. He said it. We're out to create a wealth effect. And I would say, like, what's he doing out to create a wealth effect? Maybe the American people, need to educate themselves, need to work at whatever it is they're doing. And maybe we all collectively create real wealth. Why do we need a central bank trying to create a wealth effect? What in the hell kind of horse shit is that? But I guess we're finding out today, because finally, it appears, now you're going to have the reverse. You're not going to have a wealth effect. You're going to have a poor effect. And they're going to retrench. And they also got sucked into a bubble that they had no idea is, and as we discussed earlier today, I don't want to beat a dead horse on this. Every country has a debt bubble. China's debt bubble is worse than ours. We have a debt bubble. France has a debt bubble. Sweden's got a debt bubble. You all got debt bubbles. Debt. The dollar is a debt instrument. Your currency is a debt instrument. One man's debt is another man's credit. So if we have a debt bubble, we also have a credit bubble. And when those bubbles begin to let air out, they don't usually let them out like a balloon. They usually, boom, they pop hard, very, very, very disruptive. They come out, and it's on the credit side that they begin to worry. The people who have the money are like, oh shit, I loaned that guy, I loaned that country, I loaned whomever a whole bunch of my wealth, and you know what? I may not get it back. I better get my money back now. I better do it now. So now we got the dollar going down, we got the markets going down, we got bonds going down. Oh shit, where are you doing my money? I better just get out of all this crap and get into gold. Bitcoin ain't going anywhere. Ain't going anywhere. Just sitting there. There's like about 10 or 15. What is it? They say there's like about 30 families that own Bitcoin. Good luck with that when they decide to get out, or just one or two of them. But so any case, we don't trade on any of that, right? We don't. But we can't help but when we're around the markets day in and day out to see what's taking place, and the noise around it, which is just, ludicrous. But that's what it is. We have, Frederick is in Sweden. From what I understand, there's about $17 trillion of European money in our markets. They may not be liking what they're seeing. Might say, "Wow, shit." Maybe we got to get some of that out. I don't know where they're going to put it. Put it in China. They got a worse situation there. Where are you going to put it? It's being reset, but we just trade what's at hand, and we're extracting cash flow from the money flow. And at the moment, we're collecting these things called dinero. I would be careful about getting too right now. We're seeing and hearing a lot of bearishness on the American dollar. I'd be very careful about buying into or shorting into that now and getting too vested or short the American dollar. Because it is true that the American dollar is not backed by gold anymore, and that was taken off, what, 1971 or 73 by Nixon. But it is, I'm sorry to say, it is backed by aircraft carriers. So if the shit hits the fan any place in the world, and this is something more than a credit bubble, and things go sideways, the American dollar will rally. And it could rally. It could rally really, really hard. And what people will want won't be gold per se. What they will want is safety, safety of their assets, safety of their wealth, maybe safety of their person. So I'd be very, even for Americans, I wouldn't get too caught up. The American dollar, the weakest the American dollar that I've seen was in the first 6 months of Obama, when on a futures contract it was all the way down to about 70 cents, just about where the loonie is now, the Canadian loonie. And I wouldn't get real bearish the Canadian loonie either. It's a very rich country and resources, and I wouldn't like that bet. In fact, I would be, we went long the Japanese yen below 65 cents. I kind of like anytime the loonie gets below 70 cents to be a buyer of the Canadian dollar. Longer term. I'm not saying like for next week or anything, but and a great time to go visit the country. Country, beautiful people. Same thing, maybe Aussie dollar, but that when in Frederick, when if and when it's not if, it's when that American dollar comes back up, usually within a day or two, the euro will go back down, and then that's a beautiful pairs trade just to get on it. So we'll we watch that pretty closely on the nightly video, and we'll make sure that everybody is aware of it. All right. All right. So we're well past 1 o'clock, but I kind of don't want to. Can you show something in silver? Yeah, SOV. Yeah. Yeah. I do think silver, yep, is, I wouldn't want to be initiating a new position in gold right now, although it's probably going higher, it is going higher. But I do think that silver is a great place right now, because there is the gold silver ratio in, and I'm a believer in that. I am, and it's way off. Oops, let me put it in. I'm going to put it in up here. So I'm just going to create a blank row. This is Frederick asking about silver. So we can look at silver a couple of different ways. Let's look at it through a futures contract at SI. And let's let it populate. All right, and let's look at it. Let's go into a monthly view. See if we get a monthly. So silver went long 14 months ago at 26.69. So, and then let's just give it a full view. So then let's just go look at it on a weekly view. The weekly view was 59 weeks ago at 27.15. So you're not likely to see that. I don't think you're going to see 27.15 again here on a futures contract anytime soon. So it's bullish. I mean, we make it a bullish or a bearish determination on the weekly. The weekly is bullish. It's dipping. So let's go look at a daily, what's going on. And see, so I don't get it, but it is. So the daily went short 11 days ago. and it's rallied against it, right? And so it's gone down pretty hard here. Um, so it didn't stay there very long. I wouldn't want to be shorting, silver on a daily basis. So Swing Machine does get him wrong. He's coming up. If it um, fails as a short, it will go long. But we can drill down. Let's just keep drilling down and look at it on an hourly, and it was 19 hours ago at 32.52. So I think it's a buy, and I'd be very comfortable buying, in moderation, a futures contract. You just don't want to. I don't think it's getting below 30. I wouldn't think so. But let's look at the SLV, um, which is the ETF. And let's see. Oh, that's weird. Oh, no, no, I got the wrong symbol. SLV. There's no dollar sign in front of it. There it is. There's SLV. So you can get SLV at 29.68, and on an hour it went long 40 hours ago. On a daily basis, let's just take a look at it. Is this thing still short on a daily? No, it's going along right now. So, and I think that's a good, we'll probably be picking up silver before the day's over. Actually, Susie's not here right now, but we will. I just like it. But do your thing. But she's trying to get long on a daily now. So, in 3 months when silver is trading at 50 or 55, wow, I should have, I could have, there's never a certainty. Where would my stop be? I mean, if you have the tool in front, you just don't want to go the other way. If you have this on your desktop and you decide to get long, you could just set this on a 60-minute view and just say, okay, well, um, as long as she stays long on a 60-minute, but she's right here, I think it's a good one. That makes sense, Frederick? You're welcome. Yeah, you're welcome. No problem at all. Just, it's just with everything, just stay, proportionate. Don't, put the entire portfolio in anything, in Bitcoin or in silver, or the whole thing in gold or anything. Oops, I got everybody back to, let me put everyone back to 5 minute. I'm sorry. Shoot. Here we go. All symbols. So very hard to do, I wouldn't put everything into one thing, one asset class. Um, so I can tell you, and this is always pains me a little bit, I come in and do something, and you know, had I not ended the last robot trade with a profit, she would have gone on to make even more. And had I not entered into this mechanical trying to be cute and get the bounce, So, in this, you have to grade yourself. You have to be grading what you're doing, what the machine is doing for whatever it is you're doing, right? So if you're trading, for instance, silver, and you're trading swing machine on silver, well, maybe you decide to take a little profit, or you decide, whatever the interval is, maybe you decide to do this, maybe you decide to do that, but you want to keep track of what you're doing mechanically, and then you also want to keep track of what the machine is doing. Are you helping the machine, or are you hurting it? Sometimes you can help it. You can have, um, Daniel last week showed us that he's got really, really good trading instincts. We can tell right away. And, he really, really helped himself and helped the machine last week. But there may be other weeks where the machine, does better. So when I look at what the machine would have done today, um, it has a profit of 35.94. I got a profit of 27.13 and I'm experiencing a $400, and that's going to lower my profit factor. And the machine's profit factor for today is 600. 600. 600. So I just got to make sure this doesn't get out of hand, which it isn't going to, and see if I can get out of here, out of the trade. That makes sense. And I can only describe this, right? Mentally, right? We're all human. Um, we all, our ancestors at some place, at some time, were on the Serengeti plain, looking for the lions behind us and looking for water out ahead. And so we're always looking behind, we're always looking out ahead. Um, and we have a hard time, staying in the moment. Um, the way that we're trading here, I can only describe this to you, but after a few days, after a few weeks, I think your emotions are going to hopefully relax. And because the trades just keep on coming. Some days are going to be really big, and some days are going to be like the, bearish bad. Some days are going to be choppy, but the machine is going to just keep on coming. And you begin to do what? Live in the moment. Just enjoy the moment. And golfers describe this in a big way. They talk about, staying in the moment. What they're doing, what they think, or what they're trying to describe is, they're just focused on the shot at hand, you know, which this one's going south on me. So we'll see what we do here, but we don't have much more room on this guy. So I hate to do that, but giving me nothing, nothing. And we're going to exit. So I took a lump. Crap. All right. So we are done. And now I can run. Now that's going to really adjust my profit factor. And so I can give you mine. Now this is where the machine just embarrassed me. So now my profit factor comes back to earth, and I have a profit factor since last night of 5.5. 5.5. So that's still, it's still good. It's still very, very good. Actually, I made $5.45 for every dollar I expended. Right. All right. So I'm not going to put on any more. We'll just wait. Right. So we'll have another shot. All right. Frederick, though, good to see you. If Frederick, I do want to mention this to you too, this for the benefit of everybody. As a new monthly member, we give you a hall pass, a 1-day hall pass. So you just have to schedule it with me. You have to let me know what day would be good. And ideally, we'll connect early one morning, New York time. So like if the market's open, we could do it like around 8:30, 9 o'clock. We'll give you a 1 hour tour of everything. And then we'll give you a private link, not a Zoom link, not a, excuse me, not a YouTube link, but a private link. And the latency is much better, and you can just kind of watch and hang out. I should have put this in queue on a 1 minute too, by the way. Shit, forgot. So if anyone wants to avail themselves of that, we will. And again, you feel free to let me know. I don't know. Yeah, I don't know. What your experience is. If you've got experience with options, the nightly videos are really geared for swing traders, and we're thinking also option traders, because we're really working off of the closes. If a person wants to trade intraday like this, which is great, right? We love to do it. Um, then for us, we would say you really want to be an annual member, and get these tools on your desktop. Just for the benefit of everybody, we don't let anyone purchase an annual membership without first going through a Q school once, just once. And we want to make sure that it is what you think it is. You have a chance to kick the tires, and it's 3+ weeks. And then at the end of that Q school, if you want to become an annual member, then you can. You got a spot reserved, and we will actually give you 30% back of what you spend on the Q school. And you never have to do the Q school again. We'll add to it, update it, refresh it, and it'll always be available to you. Um, did I change back? These numbers look a little soft, but I guess we did. We did change this thing back to futures, right? I think we did. Yeah. It doesn't look right. Did I change them back? Wait a minute. I don't know if I did here. No, I'm sorry. It's like, that isn't right. I didn't change the amounts back. So we got to take this back. I'm sorry. Forgot we were still on for NVIDIA. There we go. Now, no, shoot. Sorry about that. That controls the calculation on the purse. Now we've been told, and I get this. We've had folks say, Don, you would have a lot more members if you didn't do the Q school. Yeah, we would, but we would also have a lot more failures, and I don't want to do that. I don't want to do that. I just don't. I would rather slow it down, and I would rather have fewer members and have members that are more successful by slowing it down and making sure that they're doing the best thing for themselves. So that's why we do it. And that's going to be highly unusual. Again, we don't advertise. So, Frederick, I don't even know how you found us, Frederick. You have to let us know. I'm always curious where people find us. We do the YouTube, but beyond that, we don't do anything. It's kind of word of mouth. So we thank you. We're going to let you watch now. It's 1:48. We're going to let you watch until 2. And then I do need the screens and the computer resources, so we'll have to bring it down. And I want to say thank you to everybody for coming by. We're going to compress the video. I wasn't taping this one, so we're going to compress the video from midnight last night through midnight today, which was before I put that last trade on, and we'll also tell all our members what the program was that we were running, and what the settings were too. I'm happy to do it. All right, thank you. Any other questions, let us know. Again, Frederick, welcome, and you have to let us know if you've got TradeStation. That's the other piece. If you are in another country, our tools will only work on TradeStation. So you want to find out do you have access to TradeStation? And is it the same version that we have here in the States? Same version, Frederick? 10.0? If you go to your help button on TradeStation, it'll say what version you have. Ours is 10.0. Yeah. Oh, beautiful. All right, great. Yeah, beautiful. Yeah. So what happens is during the Q school too, if you want to do this, um, um, and we have to schedule. You have to let us know, right? So we usually start on a Monday, and we book these things, folks out, weeks, months in advance. We will send you programs as we're going through the Q school. So you have a chance to work with them on the TradeStation platform. The first thing that we send is Swing Machine with instruction, personal instruction on how to use it. And this is what posted. This is what, and we're proud of what he did. We really are. Whoops. This is Daniel's. He's a neighbor of yours. He created the score sheet, by the way. We have our own score sheets we provided, but he did this one. Last week was his first week with Swing Machine. Monday, Tuesday, Wednesday, Thursday, Friday. He traded. Here you can see what he was trading. He traded one mini of the ENQ, one mini of the ES. He did trade 10 euros, and that would be the same margin levels as one mini. So I get that, and I understand why you'd want to trade euro. It's a great trading product. On Monday, he had a profit factor of 647, 25,000 bucks. Exceptional. That was an exceptional day last Monday. Monday today is. Tuesday, he did 1365 for 30, profit factor 30. Wednesday, profit factor 2.27. Thursday, profit factor of 7.41 for $3,000. Friday, 1.4. Now that probably felt like, he still made nearly $1,000, but you can tell that probably felt like he was putting shingles on a roof. He had to be really, really working. That had to be a grind, right? Compared to these others, this is like, whew, it's nirvana. So at the end of the week, he did $32,000 his first week, and he had a profit factor of 10.22. He was making $10.22 for every dollar he expended. That's a beautiful thing. Now, in fairness, he does have trading experience, and that's obvious to us. One, the detail of the score sheet, and also just we can tell. I mean, Daniel may be listening, and I don't, but he did very well. The others have too, Alan and Dickon in other parts of the world. So it doesn't in the end, it doesn't matter what anyone else does. When Rory McIlroy was trying to win the Masters, he wasn't really interested in having a Discord conversation with DeChambeau. DeChambeau, I don't know, maybe young, but he's like, he didn't say it quite like this, but he kind of did. He didn't talk to me the whole round. No shit. He was concentrating on his own job, right? He was concentrating on winning the Masters. Rory's 35, DeChambeau's 25, 26, he's just younger. So we're not on Discord. We're not chatting it up with them. They're in their individual silo. I mean, we're here, we're available, but everyone's trying to get done what they need to get done. And that's only matters, right? It's, what does Frederick do for Frederick? What does, Susan do for Susan? What does Daniel do for Daniel? And it is, the motto behind Stock Market Caddy is, learn to trade your game. There was only one way I was going to do this. By the way, we started out doing this for Susan and I before Stock Market Caddy. That wasn't even on the radar. We started out in the early 2000s. That came about in 2012. And I said, the only way I'm going to do this is I need and want to structure Stock Market Caddy that we are teaching folks to be responsible for themselves, to do it themselves, not not dependent on me or anyone else to cut their steak, chew their food, or do, no, I want folks to play their own game, right? I mean, if you go out to play golf, you want to play your own game, don't you? You want to hit the shots. If you are, whatever it is you're doing, it's a hell of a lot more fun if you're doing it versus letting someone else do it. Right now, there's a whole cottage industry, billions of dollars, in fact, of the, so-called experts giving you an opinion about this or that. You're going to be able to fire all of them. So that gives you a little insight as to who we are, what we're about. I want to say thank you, Frederick. Thank you, everyone, for stopping by. And I'm going to shut up. If there's any last minute questions, you let us know. And at 2 o'clock, we'll have to bring this down, and we'll try to push the like buttons. We appreciate it. Helps us with the algos. And if you push the notification button when we punch up, whenever that might be, I can't really keep a schedule because, not because I can't keep a schedule, but because it's kind of round the clock. Um, so we can punch up at various times. And if you push the notification button, you'll get notification that we punched up. And tentatively, we're not sure, about this, but we may be providing some live feeds into the members' website, um, probably for annual members, primarily. Um, but we'll see. We're still exploring the technology on that front. So again, we're going to let you watch. I'll say goodbye now if there's no other questions, and then, shortly here we'll be having to sign down. Good day to you too, Frederick, everyone. Okay, everyone. We do need to sign off. It looks like this is gonna, keep coming down. What is it? Caddyshack. I don't think the heavy stuff's gonna come down for a while. Oh, it's coming down. Um, we just haven't seen those lows. What are we gonna do when we get down to those lows? So if I think we need to break those lows, if the enthusiasm and the momentum picks up, then we're still weeks away from carving out some sort of a bottom. If we punch through the lows, I'm thinking the lows on the S&P down around 4,900. If we punch through that, we go down another couple hundred, 4,700, 4,500, something like that, and the enthusiasm dries up, then sure, we're gonna set up for a hell of a summertime rally. But I'm not calling anything like that, and we're not placing the trades yet. It's just way too soon, So we're just going to continue to do what we do and carve the cash out intraday, and which is a fine way to go, right? I mean, you don't have to, do the position trades. When we do the position trades, we're using options, and I like to do the S&P, the SPX, the S&P cash, but we can also do stocks too. So, all right, thank you. Have fun, everybody. Reach out anytime. By the way, neglected to say this. If you're thinking of the Q School, we've done this a few different ways. We have on-demand videos. So if you want to reserve a spot for whenever, if it's going to be whenever, and you want the videos in advance, we can do that. Right? We give you access to the videos. The one-on-one instruction would come later, and so we have done that. And I think it's been well received. I hope it's helpful for folks, to free up their schedules a little bit. So just know that that's a possibility. Again, we're small, right? It's just Susan and me, and so we want to accommodate folks and be flexible, and so we do say 3+ weeks, but we have some flex, especially if we know in advance. So if you're thinking of it and you want to call and discuss timing and starting and how you want to do it, you let us know, and we'll try to work with you and around your schedule. I'm pretty fortunate. Now I don't, no more travel for Dawn, business travel, no more, conference calls. We got Q schools, but no more conference calls, no more corporate bullshit. We said goodbye to that, in the early 2000s. Thank God. It was good. I mean, it was good, but uh, it's nice. Have fun, everybody. Thanks again.